So what happens when the investment demand comes roaring back? Industrial demand does not pull away, and you've got 30% left to feed the investment side of it. I mean, it could just absolutely be explosive. This can be a great place to be, and maybe give crypto.
You're watching Silver News Daily. Subscribe for more.
The silver market is on the verge of a historic shift that could send prices parabolic. Imagine a perfect storm where industrial demand for renewable energy and electric vehicles collides with a surge in investment demand fueled by inflation fears and geopolitical tensions. Well, you don't need to imagine because we're living in that scenario. Experts like Peter Krauth are sounding the alarm, saying we've never seen these forces converge quite like this before. This isn't just another market cycle. It's a pivotal moment that could redefine silver's role in the global economy. Even global banks and other huge players in the commodities market are beginning to regret their short positions on silver.
Yeah, so there actually is some interesting data recently. So the one that most people follow is the Silver Institute. And earlier this year, they were predicting that we'd have a deficit of about 215 million ounces. And now, interestingly, they've revised that down a little bit. They think it'll be closer to about 180 million ounces. Either way, we're somewhere around 20% of silver supply. So just to kind of refresh your viewers on this, the silver market is about 1 billion ounces a year supply. About 85% of that comes from mining, and the other 15% roughly comes from recycling. But demand is about 1.2 billion ounces. So we're really consuming 20% more silver than we're producing every year. And so, earlier this year, I started to dig into this to figure out how come the silver price isn't just absolutely rocketing in this kind of environment. And what I saw was that you've got inventories in the large silver exchanges, futures exchanges like the COMEX, the LBMA, the Shanghai, and the silver ETFs as well, the silver-backed ETFs. You've got a lot of silver there, but those inventories have been dropping dramatically since early 2021. So I think that a lot of the deficit has been filled by tapping into these above ground secondary supplies. I think the game is really getting really tight in that aspect. There's no doubt some I guess you could call it undocumented secondary supplies. In other words, hoards that are held privately, whatever, larger hoards, even small amounts. People are slowly sort of starting to sell it back into the market at these higher prices. But I think that's quite limited. I think these kind of difficult to measure supplies of silver, secondary supplies, are pretty tightly held and are going to want to see considerably higher prices to eventually come in to help meet the deficit. The Silver Institute themselves have said that they expect these deficits to go on for multiple years going forward. They think we're going to actually see new record.
Let's dive into what makes this moment in the silver market so unique. For decades, silver has served two masters: industrial innovation and investment security. But today, these forces are converging like never before. On one side, the industrial demand for silver is surging, driven by renewable energy projects, electric vehicles, and even advancements in medical technology. On the other side, investors are turning to silver as a safe haven, seeking protection against inflation, currency devaluation, and economic uncertainty. This dual demand isn't just a coincidence. It's creating unprecedented pressure on the market. Experts like Peter Krauth argue that this convergence is setting the stage for something explosive. So, how did we get here? And why is this moment so pivotal? Let's break it all down.
So they are net short. In fact, they are net short most of the time, to tell you honestly. It's a matter of degree. When they become, their outlook is the most bullish is when they're neutral. In other words, they have zero short position, and not And I'm not talking about a long position. Like I say, it's very rare actually that you see a long position at all in the commercial hedgers. They're there basically, if you think, for example, of a mining company that has substantial silver production, you always want to protect against the risk that the price will fall. So the investment banks that they deal with, or unless they do it themselves, these mining companies, will be to protect against a drop in the price. So, like I say, the most bullish position traditionally that you see in the commercial hedgers for silver is that they're neutral, and the most bearish is when they are fully net short. And that goes up to about, I'm going to say, 75 to 100,000 contracts. Recently, they were at about 80 or 82,000 contracts. Now they've come back down to about 60 or so thousand contracts. So that's a considerable drop. And like I say, it's in the right direction. So that kind of gives you some perspective of how the commercials use silver futures, and they've gone from, the best way I can put it is that they've gone from feeling like silver has is quite likely to drop, to silver has moved away from that and has less probability of dropping from these levels. There is, I think, they're since they're relatively high net short positions, they probably do feel there is there's a little bit of downside risk, but because it has started to move away, I think that they're showing their relative bullishness in terms of the silver price.
Now let's talk about why silver has suddenly become the star player in the Industrial Revolution. This isn't your ordinary demand story. Silver is practically irreplaceable in some of the fastest-growing industries on the planet. Take renewable energy, for instance. Solar panels are guzzling up silver like never before, with new technologies using as much as 50% more of the metal to boost efficiency. Then there's the electric vehicle boom. Each EV on the road requires a significant amount of silver for its electrical components, and as EV adoption skyrockets, so does the need for silver. And that's not all. Silver's antimicrobial properties have made it a key player in the medical world, from advanced wound dressings to life-saving devices. The demand for silver isn't just growing. It's exploding across industries that are transforming how we live. But here's the kicker. The supply can't keep up. Unlike other metals, silver is often mined as a byproduct, meaning production can't just ramp up overnight to meet this demand. So what happens when industries driving the future, like renewable energy and EV, start battling over a metal that's in limited supply? We're already seeing signs of strain, and the numbers are mind-blowing. Stick around, because the deeper you look into this industrial silver story, the more incredible it gets.
So it's actually quite interesting because if you look at where they until about, I'm going to say about maybe a month or so ago, they were at a I'm going to say a multi-year high, just below a multi-year high in terms of short position, net short position. And that started to come off, and that actually pretty much coincided with the peak in silver right around $32, which was sort of late October. So that started to come off, which says to me that they no longer feel that, or at least they have less conviction that silver is ready to, or that there are higher odds that silver will pull back, or that it's as fully valued, I guess, at this point. So it's nice to see the commercial hedgers pull back on their outstanding, on their net position, short position in silver. It's not at its most bullish. Usually you get that after a considerable correction in the price. But it's certainly, like I say, you don't have to have that set up exactly where silver has pulled back and they reverse from a zero position in net short to move towards a higher position in net short. All that to say that commercial hedgers, the direction of their position is looking.
Now, let's talk about why silver has suddenly become the star player in the Industrial Revolution. This isn't your ordinary demand story. Silver is practically irreplaceable in some of the fastest growing industries on the planet. Take renewable energy, for instance. Solar panels are guzzling up silver like never before, with new technologies using as much as 50% more of the metal to boost efficiency. Then there's the electric vehicle boom. Each EV on the road requires a significant amount of silver for its electrical components, and as EV adoption skyrockets, so does the need for silver. And that's not all. Silver's antimicrobial properties have made it a key player in the medical world, from advanced wound dressings to life-saving devices. The demand for silver isn't just growing, it's exploding across industries that are transforming how we live. But here's the kicker: the supply can't keep up. Unlike other metals, silver is often mined as a byproduct, meaning production can't just ramp up overnight to meet this demand. So what happens when industries driving the future, like renewable energy and EV, start battling over a metal that's in limited supply? We're already seeing signs of strain, and the numbers are mind-blowing. Stick around, because the deeper you look into this industrial silver story, the more incredible it gets.
Point exactly. I mean, it's what some call a hybrid metal, because it's really got two sort of generational drivers, right? You've got, like you say, this tech and industrial side to it in terms of demand, which really has no choice. It needs to keep consuming it. It can ebb and flow a little bit, but I like to say that it's sort of the industrial side of demand that provides a rising floor under silver, and then it's the investment side of it, the investment demand that comes and goes, so ebbs and flows more in a more pronounced way, because it's more capricious, I guess, a little bit, and it also depends on kind of what's going on geopolitically and so on. It's more reactive, but when it comes with some dramatic force, and I mean, it could really shock in terms of the percentage it represents of the silver market. And to my point of earlier, where I talked about how the industrial side, like if you go back 10 years, industrial demand for silver only represented about half of the overall market every year. We're now at 70% for industrial demand, a lot of which really has no choice. It can't go away. It absolutely needs the silver. It doesn't have substitutes in almost any of those applications. And so that means now that the investment side has, instead of 50% like it had 10 years ago, it now has 30% available to feed it. So what happens when the investment demand comes roaring back? Industrial demand does not pull away, and you've got 30% left to feed the investment side of it. I mean, it could just absolutely be explosive. So I think that you're absolutely right. It can have really a huge impact in a short time. We know silver is volatile, and then the silver stocks can be that much more volatile. They'll leverage up the gains in silver. Most of them, the quality ones anyways, really will leverage silver prices dramatically. We saw that actually partly this year. I mean, some stocks were up 50, 100, more than 100% in the span of about 6 months. Silver bottomed at about $22 in February and then peaked at 35 or so, I think, in late October. So, I mean, you had some stocks just absolutely roar higher. So yeah, I mean, this can be a great place to be, and maybe give crypto a bit of a run for its money.
Now, let's dive into the heart of the problem: the supply squeeze. Silver's supply chain is under enormous pressure, and the cracks are starting to show. Here's the deal: most silver isn't mined as a primary resource. It's a byproduct of mining other metals like copper, zinc, and gold. That means the silver supply is at the mercy of these other industries, and ramping up production isn't as simple as flipping a switch. On top of that, we've been seeing consistent supply deficits year after year. In fact, since 2021, silver demand has outpaced supply by millions of ounces annually. Inventories at major exchanges and ETF are being drained, leaving little cushion for future demand. And don't think recycling can fill the gap. It's limited, expensive, and nowhere near enough to meet the rising need. What does this all add up to? A perfect storm where demand keeps climbing, but the supply simply can't keep pace. Picture it. Industries fighting over limited silver for their technologies, while investors scramble to secure their piece of the pie. The pressure is building, and the question isn't if we'll see a breaking point. It's when. But how did we get to this point of such tight supply? The answer is coming up, and it's a game changer.
So it's supply inelastic to price. In other words, if the price goes up, the supply basically does not react. About 75% of silver supply comes from mining other metals. So just to kind of explain quickly, the 3/4 of silver supply, mined silver supply, comes from mining gold, copper, lead, and zinc. The miners of these other metals who mine silver as a byproduct, to be honest, don't care that much about the silver. The silver is sort of a nice bonus for them. It's not valued all that highly. And frankly, they're happy to take whatever price they can get for the silver. But if the silver price were to go from $30 to $60, odds are they would do nothing differently. They would accept the $60 price because it's a relatively small portion of their revenue stream. Even at $60, they wouldn't go out of their way. And it's not that easy to expand a mine. It's not that easy to, get it permitted for higher capacity, all of these things. So they would just probably just keep churning out the same amount of silver. And as I say, accept happily this higher price for the silver, and it would just, boost their bottom line. So that's why I say its supply is inelastic to a higher price. The supply will probably not move much, even on a considerably higher silver price. And that becomes a bit of a vicious circle, right? Because, then the price goes up because the market starts to realize, hey, there's not going to be more silver coming to market, even if the price is higher. So, and to your earlier point, you're right. A lot of applications for silver require very small amounts. So if you think about an electric vehicle, for example, or a tablet, a smartphone, a television, whatever it might be, sometimes it's a few grams of silver. We're talking about a few dollars for each item. And if that, obviously everyone wants to streamline and maximize profits, but, if the price of a tablet, for example, goes up, the production cost, let's say, goes up by $3 or $5, it's unlikely they'll absorb it. But if they end up pushing, the retail price up by maybe even double that, it's not a huge increase on, a $300, $400, $500 item. And so, the higher silver price would not necessarily impact it all that much, but they absolutely need it. It's indispensable. So they'll go ahead, they'll buy it at market, they'll get the best price they can, and they'll keep putting it into the product, and they'll pass the cost on.
Let's talk about the bigger forces driving this silver frenzy, the macroeconomic catalysts that are turning this market upside down. First up, inflation. As prices rise across the board, investors are seeking out tangible assets that can hold their value, and silver, with its dual role as a precious industrial metal, is an obvious choice. But it doesn't stop there. Central banks around the world are pivoting on interest rates, with the Federal Reserve signaling potential cuts that could drive silver prices even higher. Why? Because lower rates make non-yielding assets like silver far more attractive. And then there's the elephant in the room, geopolitical tensions. From strained global trade to regional conflicts, uncertainty is at an all-time high. Historically, moments like these have driven investors into safe haven assets, and silver is always on the list. Remember how silver prices surged during the 2020 global crisis. We're seeing a similar playbook unfold now. Combine these factors with a weakening U.S. dollar and the case for silver becomes even stronger. When the dollar drops, silver becomes more affordable for international buyers, creating a feedback loop of rising demand. With all these economic and geopolitical forces aligning, the silver market isn't just heating up, it's about to boil over. But how does this translate into actual market performance and price predictions? Let's look at what the experts are saying next.
Absolutely. So what's interesting is that and this is just a great way to get a handle on some of the impact of AI. So if you compare a chat GPT query to a Google search, the chat GPT query will actually take 10 times the energy of a Google search. So, AI is certainly being incorporated in all kinds of applications today. I certainly see it all day long as I do my work. It's pretty much everywhere. And so that's implying a lot of new, unexpected, demand or brand new sort of demand for energy. And it also has implications in terms of data, because the amount of data that's being, if you didn't even include AI, just the amount of data that the world is generating is just growing sort of exponentially. AI is just adding a brand new layer on top of that. And to give you some sort of basic stats on it. We're facing about a 60% increase in the amount of data that we're generating every year. If you compare the 2010 to 2013 time range, and next year we're expected to generate more data globally than the entire world did between 2010 and 2016. So the amount of data is really becoming tremendous. We've seen the big four companies like Microsoft, Meta, Google, and so on. Their Alphabet, they're turning towards nuclear. And so what's interesting is that I personally think that that's a little bit, I'm going to say it in a qualified way, but it's a little bit of a one-off. First of all, they've got the means, they have the cash, they have the technical ability, they can tap into what they need to get this done. But for them to turn to nuclear makes sense. One is that it's clean. Two, they're tapping into a lot of unused capacity. So I think that sort of to turn that on relatively quickly is realistic for them. But it also takes a lot of capital. But I think that sort of the next layer of companies that are going to have to tap into clean energy may not have that luxury. So I think that for me at least, the obvious answer ends up being solar, because it's clean, it's cheap, it's fast to permit. The one sort of downside, I guess, honestly, is probably the footprint. Because if you need to build a solar farm, it is going to take a lot of room. But these things tend to get permitted pretty relatively quickly. And so I think that solar will benefit a lot from the demand that AI brings on, and that the growth in.
Now, let's turn to the experts and their bold predictions for silver's future. When industry leaders like Peter Krauth start talking, it's time to pay attention. Krauth, who's been following the silver market for decades, has some eye-popping projections. He believes that we could see silver prices climb to as high as $1.50 per ounce in the very near future, and even suggests it might break past $7.5 by 2027. That's a significant jump from where we are today. And it's all thanks to the perfect storm of industrial demand, investor interest, and a shrinking supply. But it doesn't stop with Krauth. Major financial institutions are also setting their sights high. Citigroup is predicting $1.40 per ounce by 2025, while J.P. Morgan and Saxo Bank are forecasting a similar outlook. Even the World Bank is projecting a 7% rise in silver's value for 2025. While these predictions vary slightly, the consensus is clear. Silver has major upside potential. Now, what makes these predictions so compelling? It's not just about the technical analysis or the charts. It's the real-world factors driving them. The Industrial Revolution, Silver's role as a hedge and the ongoing supply shortfall are creating the perfect conditions for silver to shine. But can it really hit these targets? Let's dive deeper into why the silver boom is more than just hype.
Deficit levels in the next 5 years. And so the picture really remains very bullish. They did revise their deficit recently for 2024 down a little bit from, like I say, about 215 to about 180 million ounces. Part of that is they think that jewelry and silverware demand will come off a little bit. They also think that mine supply will go up a little bit. I'm not quite as bullish. I guess we'll have to see probably by, I think, next April or so when they publish their numbers, their final numbers for 2024. But I think that that's a little too conservative, frankly. I think that, one of the biggest drivers is industrial. Now, if you compare what it represents percentage wise to total supply, if you ignore these secondary supplies, industrial is now 70% of the entire supply of silver. So 700 million ounces versus a billion ounces. That's pretty substantial. And a lot of that, is in applications where the silver is not replaceable. The biggest and best example is solar panels. And solar panels, although, you've got some saying, well, if we get an economic slowdown, China certainly is struggling economically. They had a big stimulus package. They're now looking like they're going to be doing even more stimulus. They have a lot of overcapacity in solar panel production, which means that there's not going to be any limit to supplying solar panels. And what I think is important is that even if there were, let's say, a slowdown, so some growth, but not the same growth as forecast in solar panel production, what's interesting is that there's a technological shift in this market. And so we're moving away from this older technology called PERC, which is an acronym, and we're moving towards much more of solar panel production being with this newer technology called TOPCon. And TOPCon uses up to 50% more silver per panel. So even if you get a slowing in the growth of solar panel production, you're still switching to a new technology that itself just requires more silver for each panel. So overall, I think that industrial demand will stay very strong. And like I say, you've got, if you've got a recession, if you've got economic slowdowns, you have government stepping in and kicking in the stimulus. So I would expect that this is going to hold up really quite well.
Now, let's open up the conversation and bring you into the picture. With everything we've covered, the surging industrial demand, the supply squeeze, and the bullish predictions, there are some critical questions that need answers. For example, could we be witnessing the start of silver decoupling from gold? Silver has always played the role of the runner-up, but with its skyrocketing industrial importance, is it finally stepping out of gold's shadow? And here's another question. As central banks begin to see silver as more than just a monetary metal, could this shift fundamentally change how it's valued on a global scale? If silver is becoming indispensable in green technologies and industrial growth, does it make sense to keep treating it like a secondary asset? We want to hear your thoughts. What do you think will drive silver's price the most in the coming years? Industrial innovation, investment demand, or maybe something else entirely? Drop your insights in the comments below, because this is more than just a discussion. It's a chance to shape the conversation about the future of silver. So, where does all this leave us? Peter Krauth and other experts make one thing abundantly clear. The silver market is at a pivotal moment, and the convergence of industrial and investment demand, coupled with tightening supply, is unlike anything we've seen before. This isn't just speculation. It's a perfect storm backed by hard data and global trends. Imagine a world where silver's role in renewable energy and electric vehicles grows exponentially, while investors continue to flock to it as a hedge against inflation and uncertainty. With supply chains unable to keep up, we're looking at a recipe for a potentially explosive price rally. Could silver break past $50, $75, or even $100 in the next few years? The pieces are all in place, and the market's next boost could be history in making. If you're ready to stay ahead of the curve in this unfolding silver boom, don't forget to subscribe and turn on notifications. We've got more insights and analysis coming your way. And as always, remember, this isn't financial advice. Make sure to do your research and consult with a professional before making any investment decisions. The silver market is heating up, and now's the time to stay informed.